Welcome to Earnings Recap. Today we're covering Alphabet's earnings report and call. If you enjoy this content, please like the video and subscribe.
So today we're diving into Alphabet's first quarter 2025 earnings. We'll break down what happened and maybe more importantly, what it all means for them going forward.
Exactly. We want to give you the essential rundown, in plain English. The goal isn't just reciting numbers. It's about figuring out, was this performance good, bad, indifferent, and why should you care? Whether you're thinking about the company's strategy or, as an investor.
Right. And we've based this on their official Q1 2025 earnings report, the 10Q filing, plus the transcript from their earnings call with analysts.
Okay, let's get into it. What's the big picture financially?
All right. So overall, pretty strong. Revenue hit $90.2 billion. That's up 12% compared to last year.
12%. Solid.
Yeah. And actually, if you look at it in constant currency, so ignoring exchange rate effects, the growth was even better, like 14%.
Okay. So the underlying business momentum is definitely there. What about the bottom line? Profitability. Revenue's one thing, but...
Good question. And that looked even stronger, actually. Net income jumped 46% year over year.
46%, wow.
Yeah, it reached $34.5 billion. And diluted earnings per share, up 49% to $2.81.
Okay, so that's a really significant improvement in profitability. They're making more from what they're bringing in.
Exactly. It suggests they're operating more efficiently, not just growing sales.
In cash. How's the cash situation looking?
Very healthy. Free cash flow was $19 billion for the quarter.
$19 billion.
And nearly $75 billion over the last 12 months. Plus, they're sitting on a huge pile of cash and marketable securities, about $95 billion.
Okay, so financially, they're in a very strong position. Lots of flexibility there.
Definitely. Gives them plenty of firepower for investments, acquisitions, buybacks, you name it.
All right, let's drill down a bit. Google services, the core business, search, YouTube, Android, all that. How did that segment do?
Google services revenue came in at $77.3 billion. That's up 10%. And the main drivers were, unsurprisingly, Google search and YouTube advertising.
Search still seems to be the engine then.
It really is. Search and other related ad revenues climbed by $4.5 billion. They said this was driven by more searches, especially on mobile, and advertisers spending more.
Any specifics on clicks or cost?
Yeah, paid clicks were up 2%, and the cost per click actually rose 7%.
Oh, interesting. So advertisers are paying more per click. Suggests they're seeing value, right?
Seems that way. Continued strength there is, a key positive for Alphabet.
And YouTube. We hear a lot about YouTube's growth.
YouTube ads brought in an extra $837 million in revenue. They pointed to growth in both direct response ads.
I was asking you to click or buy something now.
Exactly. And also brand advertising. And interestingly, they mentioned TV is still the main screen for YouTube viewing in the U.S.
Still the big screen in the living room.
Yeah, and they've apparently been #1 in streaming watch time for 2 years straight. Oh, and they hit a big milestone, over 1 billion monthly active podcast users on YouTube.
1 billion for podcasts. That's massive reach.
Huge. A very engaged audience for ads there.
What about the other parts of services? The network ads, subscriptions?
Google network revenue dipped slightly, down about $157 million. They blamed currency effects and lower revenues from Ad Manager and AdMob.
Okay, a small dip there. And subscriptions, like YouTube Premium.
That area saw good growth. Revenue up $1.6 billion, mostly driven by subscription growth, especially YouTube Music and Premium. They now have over 125 million subscribers combined.
Over 125 million. That's a nice recurring revenue stream they're building. A definite strength.
Absolutely. It adds stability beyond advertising.
So services looks pretty solid overall. Let's shift gears to Google Cloud. Huge focus area.
Massive focus. And the results were impressive. Cloud revenue jumped 28% to $12.26 billion.
28% growth. That's strong in a competitive market.
Very strong. Mostly driven by demand for their core infrastructure services, Google Cloud Platform, or GCP.
But is cloud making money yet? That's always been the question.
Ah, yes. And here's where it gets really interesting. Operating income for cloud soared. It hit $2.2 billion for the quarter.
$2.2 billion profit.
And the operating margin was 17.8%.
Wow. Compare that to last year.
Last year, Q1, it was 9.4%. So a huge jump in profitability.
Okay, that's a major development. Shows much better efficiency and that the scale is starting to pay off.
Definitely a key positive trend. It seems they're really turning the corner on cloud profitability.
But they did mention something about supply constraints, didn't they?
They did. They acknowledge it's a tight demand-supply environment right now, so revenue growth might fluctuate a bit depending on when they can actually deploy new capacity. They expect more capacity coming online later in 2025.
Okay, so something to watch. Strong growth now, but maybe some variability ahead. Could be a potential headwind if demand outstrips supply too much. All right, what about the other bets? The moonshots, Waymo, Verily.
Other bets revenue actually went down this quarter to $450 million, and the operating loss grew to $1.2 billion.
Down. Why was that?
They explained it was mainly because they got a big one-time milestone payment in Q1 last year that didn't repeat, so it makes the comparison look worse.
Okay. So the comparison isn't quite apples to apples.
Pretty much. But within other bets, Waymo, the self-driving car tech, is showing good progress.
Yeah. What kind of progress?
Paid passenger trips are up 5x compared to last year, 5 times. They're doing over 250,000 rides weekly now.
Wow, that's starting to sound like real scale.
It is. They launched paid service in Silicon Valley, expanded with Uber in Austin, and they're gearing up for Atlanta.
So Waymo's gaining traction even if the overall segment is still losing money? That loss is still a weakness, though.
For sure. The potential is there with Waymo, but the segment's overall profitability is still a ways off.
Okay, let's talk about investments. They're spending a lot of money, right? CapEx.
A ton. Capital expenditures hit $17.2 billion just in Q1.
$17 billion.
Yep. And most of that is going towards technical infrastructure servers, data centers to support growth generally, but especially their huge push into AI.
And the outlook for the year.
They're sticking to their forecast of roughly $75 billion in CapEx for the full year 2025.
$75 billion. That is a massive commitment, mainly for AI infrastructure.
It really underscores how central AI is to their strategy. But there's a flip side.
Which is?
All the spending means depreciation costs are going to ramp up significantly through 2025.
Right, so that will weigh on reported profits, even if the underlying business is strong.
Exactly. It's an investment in the future, but it creates near-term pressure on the P&L. Investors will be watching that depreciation line.
And they're also investing through acquisitions, aren't they? The Wiz deal.
That's right. They announced they plan to buy Wiz, which is a cloud security company. It's a huge deal, $32 billion, all cash, expected to close sometime in 2026.
$32 billion. That's a major play to strengthen Google Cloud's security offerings.
Absolutely. Security is critical for enterprise cloud adoption, so this is a big strategic move.
So massive internal investment in infrastructure, strategic acquisitions like Wiz. It all seems heavily focused on AI and cloud.
Totally. And they spent a lot of time on their earnings call talking about their AI progress. They mentioned their new 7th gen TPU chip called Ironwood.
TPU, their custom AI chip.
Yeah. They claim Ironwood gives a 10x boost in compute power and is almost twice as power efficient for inference compared to their last high-end TPU.
10 times improvement. That's a big leap in their own hardware capabilities. A definite strength.
It is. And they also stressed their partnership with NVIDIA. They were first to offer NVIDIA's new B200 and GB200 GPUs.
Blackwell chips.
Those ones. And they'll offer the next-gen Vera Rubin GPUs, too. They emphasize this cutting-edge hardware powers all their AI research and models.
So great hardware partnerships complementing their own custom chips.
Right. And this is translating into product features. In search, AI overviews now have over 1.5 billion monthly users.
1.5 billion using AI summaries in search.
Yeah.
Is it changing how people search?
Apparently. They also talked about an experimental AI mode in labs. It handles longer, more complex questions, even multimodal ones, like using images in queries. Feedback's been positive, they said.
And they're pushing AI into business tools, too.
Definitely. They introduced something called Agent Designer, a low-code tool for building AI agents to automate tasks. Companies like KPMG are using it. There's also Google Agent Space for discovering information and using these agents.
AI agents for businesses.
Yeah, and pre-built ones for things like customer service, coding help, creative work. Plus, in Google Workspace, Docs, Gmail, they're seeing over 2 billion AI assists every month.
2 billion assists,
Yeah.
like summarizing emails, drafting text.
Exactly. Helping people get work done faster shows how deeply embedded AI is becoming.
And tying back to Wiz security and AI.
Yes, they mentioned using their Gemini AI models in their security products already for detecting malware, prioritizing threats. They clearly expect Wiz to significantly boost those capabilities.
Okay, so AI isn't just hype for them. It's being baked into everything. They even said AI overviews are leading to more commercial queries, right? connecting businesses with customers.
That's a key point. They're seeing tangible business benefits, and alongside all this AI push, they're still focused on efficiency controlling hiring costs, optimizing real estate.
Good to hear. And what about shareholder returns? Dividends, buybacks?
They boosted their quarterly dividend by 5% to $0.21 per share.
A little raise signals confidence.
Yep. And they continued buying back stock, $15.3 billion worth in Q1. Plus, they authorized another $70 billion for future buybacks in April.
$70 billion more. That's significant shareholder return.
Very much so. Positive signals for investors.
Okay, so lots of positives. Strong growth, huge AI investment, cloud profitability improving shareholder returns. But what about the potential downsides or risks? You mentioned depreciation.
Right. That increased depreciation from all the CapEx is definitely a near-term headwind for reported profits. Also, the tight supply in cloud could cause some bumps in revenue growth for that segment, as we discussed.
And the usual suspect for big tech.
Ah, yes. The legal and regulatory stuff, antitrust cases, privacy concerns. Those are ongoing. They can't estimate potential losses. But these things always carry the risk of a material adverse effect down the road. It's a persistent uncertainty.
Always lurking in the background for these giants.
Pretty much. Needs constant monitoring.
Okay, let's try to wrap this up. What are the main takeaways from Alphabet's Q1?
Well, I'd say Alphabet had a really strong start to 2025. You saw significant growth in revenue and, importantly, profit. Search is still the powerhouse, and cloud is showing impressive growth and a big jump in profitability.
And underpinning a lot of this is their huge bet on AI.
Absolutely. The massive investments in AI infrastructure are central. They're integrating AI everywhere, search, workspace, cloud security, and starting to see real results. Plus, they're returning a lot of cash to shareholders.
But keep an eye on rising depreciation costs.
Right, and potential cloud supply wobbles, and of course the regulatory landscape.
So it looks like Alphabet is aggressively maneuvering to lead in the AI era, building on a very solid financial foundation and keeping investors happy with returns.
That sums it up pretty well. These results really highlight their proactive push to capitalize on AI.
Okay, here's something to chew on then. Considering Alphabet's aggressive investments in AI and cloud infrastructure, how might these strategic bets reshape the competitive landscape of both the tech industry and various enterprise sectors in the coming years? What new aha moments might these technologies unlock for businesses and consumers alike?
That's definitely the multi-billion-dollar question to ponder as you think about where Alphabet goes from here.
Thanks for taking this deep dive into Alphabet's earnings with us.